Welcome to Share Talk, the only podcast where investors come first.
Hello and welcome to Share Talk. It's the Sunday roast. I'm not sure whether this will go out on a Sunday or not, but it's being recorded on Thursday, the Thursday before the holiday. So we'll see what happens here. Today I'm joined by my usual guests, or our usual guests, Kevin, Albert and Phil, and two special extra guests that we've got. One is John Mahtani, who's CEO at Media Tech SPAC, which he'll tell you all about, and also by Andrew Mail, who's the chairman at Hemp, a company we've discussed previously, but we thought we'd get somebody on the program who actually knows what they're talking about for a change. So Andrew is here and will elucidate on that situation. I don't know who to start with. Should we start with Phil? How was your week?
Cheers, Zach. I think it's been a bit of a bloodbath really on the market this week, putting it bluntly. A combination of reasons. New tax year starting next week, obviously. So I think there's been a number of people who are doing the usual bed and ice, bed and breakfasting, etc. I think also as lockdown eases, people are starting to make other plans for the cash positions in companies. So whether that be starting to plan booking holidays, etc., or if they're coming off furlough, some of the cash they want to take, the money they've been saving and putting it into other things. So this week wise, I talked about CRTM last week on the call. So I added a position with critical metals at the start of the week. That's done all right, actually, to be fair. There's basically going to be an acquisition coming, I feel, within the next 2 or 3 months, and potentially your money could be tied up on any announcement. So that's been that. But there's also MHC. There's been some good news for them. MyHealthChecked, the test kit has been added to the UK government's approved list as a private provider of day 2 and day 8 COVID testing. It's moved very well this week. We've also had some SYME news as well, which hasn't particularly gone down well. But other than that, it's been a case of turning off for the last few days and going off to do something less boring instead outside.
SYME, I'm not letting you off the hook there, because I think last week everybody was singing their praises, and even I said I didn't think the share price was going to go down in a material way after it had the thumbs up from the FCA coming back out of suspension. Yeah, and lo and behold, they came up with a sort of Monty Python-esque, but it was not a great way of flagging a one-day delay to their announcement that was coming through. I suppose it was supposed to come through by the end of the first quarter. And they managed to defer it to April Fool's Day. Not a great victory, really, in terms of the look of the company. And it's almost a stock market rule, isn't it, really, that if there is a delay, it's never normally a good delay.
I mean, you're spot on. We touched on this, I think, 2 weeks ago, didn't we, in the first call, that the schoolboy error that AZ seems to make is that he adds a self-imposed deadline to nearly every single RNS. And then, everybody expected it by Q1 end or month end. And unfortunately rolled it out today ironically on April Fool's Day. All it read was just fluff. It was literally, I read it this morning at about 7:30. I thought, this is going one way and it's definitely not up. It was a mass exit by the traders. And you could argue that maybe it's a good thing that we've now finally weeded out some of these traders or the trader mentality out of it. But it was just, I didn't even look, but I believe it got down to, it was probably a 48% drop at its maximum point, sort of 0.36 or something from the 0.6 highs. People were saying we managed to buy in at the 0.38 region and it's going to recover well, but I believe it finished around the 0.41 mark. So it really didn't do any type of recovery that it should have done. So to sum it up, basically, it was a car crash. And whether or not it has weeded out the traders, I hope it has. But I just feel like it's getting to the point where it's another Jam Tomorrow company where we're never going to get any figures on, the Storm Harbour, the actual securitizations. It's so hard to read RNSs like that.
Yeah, but isn't it the case that, if I was a CEO of, Zachmere.com, Zachmere PLC or whatever it is, and I didn't know the stock market, like, for instance, that rule about any delay is normally a bad delay. It's not a good delay. And so if you know that there's going to be a bad delay coming up, you do X, you do Y, you say this is an interim thing, or they should have had the announcement yesterday.
Absolutely. And I still don't think the announcement would have made much difference, because it just felt like another woolly, fluffy, no real context to what is actually being delivered and what the.
So, yeah, but isn't there somebody else who can read the RNS, but when it's written, and say, look, this sounds very fluffy. Could you change it so it doesn't sound fluffy?
I wish that were the case. I've said to him, I've actually spoken to him and said, just please stop putting these self-imposed deadlines on the RNSs, because it doesn't do you any favors for whatever reason. I don't think it's right. I really don't think it's right.
I'm sure that'll develop.
But with SYME, they didn't tell us anything today that we didn't already know.
Yeah.
This was the problem.
with any company, whether it's private or public, you should have somebody there who is a wise old head. I don't know whether Andrew would fit that bill or John would fit that bill, and just say, look, Zach, say if I'm the CEO, look, Zach, that RNS looks bad, do something about it, or just don't put it out. Or, I mean, is that a situation either of you found yourself, the wise old heads, John or Andrew? Anyone who would take that one on?
I mean, obviously you've got the nomad involved and you've got the broker involved as well. I mean, but it's like you say, if there isn't anything of significance, why release an RNS? Because then effectively you don't put enough news out in the first place, and then if you send the wrong message out, it creates unnecessary damage.
The message today was just delay. Everything is delayed. So basically Storm Harbor is delayed because now they want a country specific group of monetized companies instead of just the Italian group, which he had ready to go, I think. Until the captive bank comes on side, the Italian stuff isn't going to get monetized, and the vast majority of the stuff they've got to monetize is the Italian companies at the minute. It's probably 70% or 80% of it. So until the captive bank gets sorted, we're not going to get the monetization of a serious amount of money because the other stuff is not that big. So I think ultimately this is the deal. But what I was hoping for last week when I said I was positive, that he was going to show the pre-amounts of money that they were receiving for the administration. And we didn't get anything. There was no financials at all. And I think today's sell-off was basically people getting fed up, lack of belief, halas, I'm out.
We did say on the first one, been hanging between that 0.4 to 0.75 range. So I think technically you will get the swing traders back in and out. People have done a bit of a self today. That's not actually on the AIM, that share. So there is no nomad. It's on the official list. You're going to get people taking positions, people selling and buying it back, and then playing out the long game again and waiting for the news. We did say last time that it would take significant news to get it over that penny. And people have been expecting that significant news, and they've kind of got a fluffed up RNS of nothing a day late. And it's the end of the tax year. There's a lot of new, fresh positions people can be taking at the moment with the way the world's evolving, trying to come back out of the lockdown. People are changing the way they think about things and I'm looking for fresh, new ideas at the moment. And when you get an RNS like that, you think, well, I can, do I just let it crash? Or get out and try and put it in something else and get me losses back, in the meantime. So I think people will come back to SYME because the business model, principle, it's all there. But people don't like waiting, especially on these fast moving. There's not a very large public float on that share. It moves very quickly.
One of the things I was going to say, from a board perspective or from an executive perspective, I think stepping back and not speaking specifically to one company or the other, I think one of the things that a lot of companies miss along the way is the opportunity to tell a story. I see a lot of RNSs, a lot of news releases that are just kind of ad hoc thoughts, kind of random events in the course of the history of the company. And, you almost have to educate the investors along the way and bring them back. Part of that is using some artful words to actually speak to what the company is doing and remind people, stringing the story together so that, you don't have these ad hoc bits and pieces of it. I think that's one of the things that you see a lot in the marketplace now is companies trying to rush something out. It's kind of haphazard and it kind of, people don't know how to take it. I think companies would be well served to actually try to string things together a little bit more cohesively.
But isn't it the case that you have a situation like, many companies, you have the CEO and maybe another who are like rushing around trying to keep the business going. Their service providers are really just not engaged. They're not interested. They're just, sort of there for the retainer, and that's about it. And they're not thinking hard enough about the company that they're working for, they're representing.
It's really hard from a corporate perspective because many of these companies started out with 2 or 3 people at the top, and they've built the company, whether it's a mining exploration asset or an oil and gas asset or a physical goods company. It starts out with a skeleton crew, and they begin to build and build and build, and it just becomes a challenge for a lot of the companies to actually let go of that control and be able to find people that they can surround themselves that can support the company properly. It's one of the things that I often look for, whenever I look at joining a board, is you look at the people who are around, and you look at the CEO of the company, for example, and see if he's capable of hiring somebody better than himself in an operational role or a PR role or something like that. One guy can't do it all, especially as these companies move from being 10 million market cap to 50 million market cap. And all of a sudden, there's an overwhelming amount of people that want to have a finger in the pie, if you will. And you got one guy or two guys sitting there listening to the noise that's around that. And they're trying to do everything, just as you said, Zach. It's hard to do it. And finding the teams that can actually do that, that's really a key thing, because I think that's when you see companies begin to grow.
And John, would you be able to hire somebody better than yourself?
I would say my chairman's much better than me. That really resonates with me with Andrew, because even when our presentations, I always put Rick at the top, because he's done a lot more than me. He's achieved a lot more than me. But he made it very clear to me when I hired him, is you're going to be doing the heavy lifting. I'm just there to advise you. I actually feel very honored and privileged that he's actually on my board. So I would completely agree with that. I always believe hire people that are smart and let them get on with the job as well. Because this whole thing where people feel they should micromanage people and they're being smart by doing that is just a completely wrong way of running the business. The key thing is to find the right people and let them get on with it. That's why you employ them. You set them their objectives, you let them go and hit those targets. And if there is a problem, they can come and talk to you about it. When I was at Time Warner and I had a team of 26 underneath me, my door was always open. But if you haven't got a problem, you know what you're doing. By the time they've come to see me for the 10th time and asked me, this is what we want to do. I said, well, what would you do? And they say, this is what we do. I say, go and get on with it. They don't bother coming back to me again, because they know that's why I've employed them to go out and do the right things. We make it very clear. These are the objectives. This is our strategy. This is our vision. This is how we want to go out and execute, and just let them get on with it. I really don't have time. Have you done this today? I don't have time for that, because I'm wasting my own resource when really I need to make sure everybody's engaged and we're all moving in the right direction.
Is that an experience that you can understand, Andrew, or is that?
Absolutely. And for me, I'm 54 years old, and that was the lesson that I had to learn. And I learned it when I was about 33 years old. And, it was quite interesting, because it was a very close friend of mine, business associate back in Canada, that said to me, and he took me aside one day and said, "Smarten up, mate. You can't do all of this." It was a point in time when it really resonated with me, and it wasn't stuff that I didn't know. I knew what I had to do. I knew that I had to step away. I knew that I had to hire people that were better than me and more competent. And I think the term that he used at the time was aces in places. You got to hire the right aces to put them in the right places. It was something that, it took me a long time to learn that as a young man and coming into the business. But now it's something that I really look for as I get involved in various different companies.
You've been involved in different sectors. I know John is like very much a media tech man, and literally the clue is in the name there. If you've got the right skills, does that mean you can manage a company or in any sector?
I think there's common ground that you can certainly transition into. When you look at from a board perspective, you think about, your governance committee, your audit committee, things like that. Those skill sets transition, and that ability transitions. The people management, that can transition. But I think each company has its own key, unique area.
What are the key points in management? Maybe from Kevin, start off with Kevin. What do you like to see in management, and from an investor's point of view?
I think the main thing that we see from management is, yes, they should have the competencies for the particular industry they're in and understand what they're doing. But from a public-facing point of view, they need to be good communicators. The reality of most of the businesses that we've spoken about in the past that succeed are the ones that communicate the story, the way the business should unfold. It doesn't have to put figures around it, but this is the way, this is the roadmap, this is what we're going to try and do. Because stock market's a forward-looking thing. It's looking for the future. So we have to communicate clearly what's going to happen in the future. The companies that do that, I think, one, they already know where they're going, so they tend to do well anyway. But two, they've communicated it, so they get a following, and these people realize where they're headed. In terms of what John said, yes, when I managed financial service company that I was involved in, yes, this is your job, this is your goal, this is what you have to do. Now go on and get it. If you need my help, I'm here. I will help you. I will assist you. I will do whatever I can do to get you to the point you need to educate yourself, learn, do whatever. But at the end of the day, it's your responsibility. I hold the total responsibility, but you hold your part of the responsibility, and you need to go and do it. So yeah, twofold, I suppose. The second part we don't really see as investors, but the first part we do see. We see the roadmap, and that's what has to be, I think, defined.
Okay, Albert, is management being a key to your investment strategy?
Yeah, I mean, the bod is one of the most important things for me. I like to look at the history of the bod, what experience they have on the markets with relation to things like dilution. I like a CEO and a bod that's quite innovative, that's working on something that doesn't yet exist. You might notice with some of my investments that they're kind of a little bit bespoke, or they've got an edge over something that already exists. So I invest as a medium to long-term investor in products I really like, products that can change the world in a certain way. I like to look at the history and see what the bod's achieved in there. Also see what price they're buying the stock at, and try and mirror myself in. So, because if my head's on it, then your head's on it as well. So I do like the bod for me to understand the market, because some of my investment principles are market related. You can have the best product on the planet, but if you're going to go and dilute the market and you're going to get loose hands as part of your holding, it's going to slice me out. That's going to impact me. You could be building an electric space rocket, but it's nice for I think a bod to have a good relationship with investors as well, like larger ones. Try and get some of the shares tightly held, and if you need to do a raise, you can go to those investors and say, look, we've got this blockbuster product, do you fancy taking some of this placing? Because what happens is a lot of the placings that don't get oversubscribed, they end up in traders' hands. The traders have minimal targets, and they'll sell on you might send out some excellent news, like you have invented this new electric space rocket of some kind. But if those traders aren't investors, they're there to make a quick profit, you see. So for me, a bod's key. I dissect a bod for a long time. I look at who they've worked with, what they've worked on, and what they've achieved before I take an initial investment. An update in the markets is key, but fluffing things up and stringing along the investors, I don't like that. You end up in this perpetual loop of waiting, and you get to a point where you end up selling at a loss and thinking, you know what, I'll go and trade some of these volatile stocks and try and get some money back. So the bod's key for me. There's about 10 principles for me, and the bod's like way up there at the top. I need to be able to trust the bod. I need to be able to sit down, have a pint with who I'm investing in, and know that they're telling the truth, on a human level.
You may be asking too much. The pint, not the truth. Obviously, the truth will always be there, but the pint, some of them don't drink and everything else.
Well, yeah, you don't. Well, maybe not a pint. A cup of tea, maybe.
A cup of tea, yes, exactly. So, Phil?
Yeah, I think Kevin Albert nailed it there. What I would add is that I look for skin in the game. I know it's a bit of a cliched saying, but actually how many shares or how much interest has the CEO or the owner of the company actually got in their company? If they've only bought, you look back at any sort of director dealings in the company, if you've only bought £5,000 worth of shares over the last 3 years, I kind of think, nah, this isn't the one for me. I look at companies that have got directors or CEOs who've actually got proper skin in the game, 20%, 30%. I think back to critical metals I talked about last week, Russell Fryer, he's got 40% of his company. And that to me just shouts, he's got so much belief in this. Because I mean, a bit like Alessandro, a bit back to SYME, he's got probably 30-40% of the company as well. So, all those, the hallmark trade, all the signals are there for that. You just summed it up like Albert said, I like to get to know the CEO, have a beer with him. But you know what? I've actually done that in London a few times. And I thought I could judge people and I thought I could judge CEOs, but I've found that that's not always the case. You never, they can do things that you don't expect. When you least expect it, you get delistings, you get, litigation deals in the background, and and you just think, why did I ever put my, things like, for instance, how many people thought that was going to be their pension, that was going to be their retirement plan? People lost their pensions on that stock. Back to what we talked about, I think, that didn't actually make it. It was edited out of the first list. You know exactly what I'm talking about, Zach, with that smile on your face.
We'll bring it back one day. We'll get a proper lawyer.
Begins with S.
Yeah, it begins with S, ends in T, something CEO list. And basically, there's so
many. You say that. Hi in the middle.
Yeah, say hi, goodbye, as he will run off with your money.
Hi.
You think a CEO, you think that they can deliver the dream, but actually they don't, and they'll pull the rug out from under you when you least expect it. That's all I'll say on it.
The advantage I have is that because I interview people, the interview process, it's like 5-10 minutes. I've probably done like dozens or even hundreds now. And because I've done it for long enough, I can sort of, interview somebody now, and then a year later, it's a multi-bagger or whatever it is. And I interview somebody else and it goes bust, etc. And you get a feeling, it's probably actually within 5 or 10 seconds, you almost get a feeling of, this is a winner, this is a loser from the time they open their mouth. I mean, it's amazing. I think there's vino veritas, but there's also when people are in an interview and they're nervous, and they're always going to be a bit nervous, it's a really good test of the strength of the character of the person. And there are a few people obviously are very smooth and they come across like rock stars and they're complete bullshitters, but in general, you get a feeling about a company. And I think I said to you last week, it might be the kiss of death, but I said, I thought the Ferro alloy guy was very impressive, just in terms of he was down to earth, he was solid, he was experienced, it was everything rolled into one. It wasn't too smooth and slick, and it was a good mix of, it was like a Goldilocks type thing. And I think that resonated with the market. The shares went up after that. And in fact, a lot of times when a CEO interviews, the shares actually go down a bit first. It's a bit weird. It goes down for maybe a day or 24, 48 hours, as if like there's been a build up, and then it goes back. And then if it's a goodie, after 48 hours, the shares will go up, and that's what Ferro alloy did. It's just,
also, you've got to take into account market sentiment and market selection as well, because sometimes sometimes you might have a really good CEO that gets crushed. Imagine setting up a travel and leisure company in February last year. You could be the best CEO on the planet. You're going to toast your shareholders there unless they're going to stay in long. So CEOs have got to sometimes try and play that game of trying to make the business survive. And to do that, how do you not affect shareholders, when you're in that sort of position?
The pandemic's taught us that, there's almost, you can have a very good CEO in a really bad sector and he can put it across the line. And you can have some type of situations with COVID, an online tech company or something like that, and they completely fluff it. So I think in general, the pandemic's been good to sort out the wheat from the chaff. That's probably why investors have probably done better in the last year than they had in previous years, because people have had to be on their toes. Everybody's been on their best behavior, doing their best as a CEO. They couldn't because they're thinking about their 120 grand a year and thinking, well, God, I've got to keep this 120 grand a year. So they've really pulled their finger out. I think the last year has been, quite a good illustration.
Yeah, well, that's why for me, a good CEO is right at the top of the food chain. It is part of my 10 selection criteria that I have as part of my algorithm, because if you look at the background and you look at what ideas they have, what things they've done in the past, a solid bod will always help you to survive. It's like getting on a good boat, a well-built boat, or a really badly built dinghy that you've made yourself or something, you can end up toasting yourself. So that track record for me, it's like interviewing someone that's going to come and work for you. That's what I do. I dissect CEOs, and you are going to get CEOs that are going to be amazing, but I might not invest in those because I haven't got any fundamentals base, to invest. Maybe I'll invest in them in 3 or 4 years' time when they've achieved something. So that is key. And there are the odd ones that you find where it's just an absolutely really good idea and you kind of punt it a little bit. But generally, if I'm going to go large in an investment, something's got to stand out or really impress me, and the bod are a key factor of that.
But would you just, you meet John Mahtani today, you like him, you don't, would you just invest on the basis of him and forget about the business he's actually running?
No, not what.
No.
Why not?
Wine and dine him. You give him an oil massage.
I might start taking a small position. No, but I have strict rules. All the boxes have to be ticked when I buy something. They all have to be ticked, or there has to be a big potential to it. It's that, cost risk ratio factor. Are you going to put 5 grand in, or are you going to put 100 grand in? You probably put 5 grand in, like one of the fun we were talking about, and it's a bit of a hit and hope, but if it comes off, you're going to make a lot of money. Whereas if you're going to start playing with like SIPs or pension funds or larger amounts of money, you don't want to get toasted when you're investing larger. So as you go further up, the cost ladder, then the algo gets a little bit more strict.
Yeah, but at the moment you've had Chris Akers. He's in the last year he's had the biggest winners on the stock market. AAA and Dave Clever, etc. If he goes into Rogue Baron, which he did this week, a spirits company, I don't really need to know much more the fact than that he's on the share register. It was the same in a way with before John changed from being poacher to gamekeeper. When there's a TR1 with Mahtani's name on it, everybody's there like a rat up a drain pipe. They don't really want to know, because they think that he's done the DD, he knows what he's doing, he's not going to blow it. Let's follow him. And it's the same with Akers. It's the same with George Soros. If he sells the pound, what are you going to do? Buy the pound? Your argument has a certain destination. For instance, with Shavalitsky, the Eurasia mining guy, right? He's got Eurasia. He's there at Kibo. If he sets up, ABC mining next week, what are you going to do?
I wouldn't invest in it because that's not the way I operate. I like, I need a good idea. For me, it starts with an idea, then the bod follows. I'm not just going to go and buy something because like one of the best traders on the market is buying it or setting it up. I need to like what I'm buying. I need to have the passion for the idea and think, wow, like I don't want to talk about future medical again, but erectile dysfunction cream, that kind of got.
We don't want you to talk about that either, but you see the point there that it's a lot, and the market does that a lot. I mean, the market just says if the stock market superstar is in that has gone into something, he's taken a stake, I'm going to follow him because he's got the.
A lot of traders in it, and I don't like that. And I mean, AAA's done amazing. It's gone right up from right down under a pence, and it's done amazing. I still don't really understand it. I don't, and where will we be in 20 years? What is it? I don't know. I need to know exactly what I'm buying, why I'm going to buy it. So some of the things I'm buying and going long is, say, like a new vaccine or new treatment, something revolutionary that could potentially change the world, that's going to bring you back the 60 to 100 times that you've put on. Yeah. And I think passion for me in investing is something, because I enjoy looking at it and reading it. It's kind of like when a new tech comes out, I can't buy stuff that doesn't interest me. And everyone's got their own approach, and no approach is wrong. I have to switch my drive on. And the only way I can get driven is to have the passion to buy something where I think, wow, this is good. This could change the world in this way. There's a new treatment. They're not intravenous, or it's going to replace some self, like healthcare. Everything's going remote with the COVID. Like we were talking about remote smear tests and all of this last week, that the future of the world, that's how I see it. And I really like that sort of thing.
John, you've decided to set up a SPAC in media and technology. Clearly that's been your area for 20 years. Is this a good time for it? What's your rationale behind that? Apart from we've been in a boom in the tech space, but what's your idea behind all that?
The thinking is very clear. We incorporated the company last month, and we're looking to list on the standard list on LSE next month. And the plan will be, we'll look to raise at least 10 million. I mean, that's the plan. There's a lot of interest that we've had. We've got a very strong board with Rick Sennett and also with Celia Lee. And we have very good advisors. So if you look at our advisory team of Brian Cannan and Barry Downs, they both run Shore Valley Ventures, which is a very, very successful VC fund that focuses on technology. And they come across a lot of deal flow, and that's what de-risks us as a SPAC from many other SPACs, because lots of other SPACs come together, raise money, but where do they find that deal? And if you don't find the deal, particularly on AIM, the stock gets crucified because you haven't closed it within the time frame. The benefit of listing on standard list is we don't have that gun against our head. We've got 2 years to find a deal. And it just means that if I'm going into a negotiation, I'm feeling a lot more composed about the fact that I've got time behind me. Whereas if the seller knows that, oh, this guy's got to close a deal within the next 4 weeks, otherwise his stock is going to tank because everyone's going to dump it because he didn't close within the time frame. Or if he doesn't have enough money at the table when he comes to negotiate with me, ideally what we want to try and be is, for me, one of the things we talk about as CEO, the most important quality I would say is to be composed. So when you make the correct decision, you're making it from a basis of composure, and that way you don't get caught in the emotional wrangles of making the wrong decision under pressure. And I would say that to anybody, even if you're investing. I see a lot of panic in the market a lot of the times, and if you back the right companies, like Albert has said, if you've done your research, if you've got your criteria, you just sail through those moments. But I see so much reaction to a movement in price or failure of delivery. The thing is nothing is built in 5 minutes. It takes time to set out your strategy, to set out to sell. And right now, if you look at technology particularly, the sector is absolutely booming. And, long may it continue, because we're obviously looking to list at the end of May, and then potentially, we will start identifying targets to go and have conversations with. And, my plan is to, as a board, is to basically look to close a transaction towards the end of the summer. If not, ideally come back and look to relist before the end of the year. But, we have a very clear objective. We're looking for businesses that, have got good teams, management teams, can identify a good product or service from a technology perspective that we feel is scalable. And that is really important for me. I don't want to buy a UK type business that's only, it's only fixated in the UK. I want to see a business that has got a scope to grow it internationally. And from my perspective, particularly when I was at Warner Brothers, I delivered content to 120 countries. My annual budget was $250 million. So numbers is not a problem for me. Dealing with the big ticket stuff I can do quite comfortably. But the key is to be able to take something and to take it globally, because that's what really excites me about picking up assets in Europe. They're going to be much cheaper than you're going to buy in the US. US assets are very, very overly priced because there's a lot of money there. I've seen some interesting companies across mainland Europe. If I could relocate some of those businesses back to London and then use London as a base to take them global, I think we're really onto a winner. And I think I've got a very clear strategy and a very clear vision in my mind as to how I want to achieve that.
We're not wanting to feed you a line, but isn't it the case that any successful, scalable tech business these days should be a unicorn?
Yeah, ideally.
It should get to be, a unicorn size.
There's no reason. At the end of the day, if you're going to look for something that's disruptive, that's innovative, that's the key thing. At the end of the day, you've got to be able to pick up something and say, look, I can take this from here to there, and have a very clear focus and a very clear roadmap of how you're going to achieve that. But at the same time, like the guys touched on before, it's really important. There are two aspects to the story. One is the fundamental growth of the business, but the other side is actually telling the story to the market. So you keep your investors engaged, you keep them interested, and you just don't disconnect with them. The worst thing that lots of CEOs do, they raise their money and then they disappear for 12 months. And it's like, hold on a second, I put money into your company and you're not even telling me how you're getting on with it. And that's what creates a lot of frustration. Tell the story the way it is. Get out there and have the investor calls, release research, do Zoom calls. I'm privileged to be here tonight because at the end of the day, I want to reach out to as many people as possible for the right reasons, because I've been an investor and I want to make sure as a CEO, I want to do the right things by my investor on the basis that, I set up a Telegram group 10 days ago. We've got 360 followers. I'm privileged. What can I say?
Andrew, would you echo those views and opinions?
100%. 100%. It's so true. It's that engagement with the investor. It's being able to articulate the story and string the story together and not having it in fits and starts. I think one of the key things that a lot of CEOs and boards and executives get caught up in is an investor. I'm going to pick on Phil, but an investor like Phil who phones you up and says, what's new? And the CEO or the board member is there now trying to fill a void of space and ends up saying things that are effectively off script of what the company may be actually doing. And it takes the perception of what's going on with the company down a rabbit hole. And the message has to be clear. And it goes back to what I think it was Kevin that said it, being able to have an ability to tell the story and articulate the story properly is absolutely key, because the message has to be straightforward. The message has to be clear. The message has to be strong. The investor has to understand it. But there is that amount of work that every company is involved in, which is still confidential until it becomes releasable through an RNS and releasable as part of the strategy of the company. And not breaching that threshold, not breaching that line is absolutely critical. And when you look at some boards and some CEOs, when they're scrambling for information and they're not able to actually articulate the story properly, you end up with these errant little bits and pieces of information that confuse the story and confuse the investor. And John's right in his statement insofar as if you can build that engagement with your investors, they become investors, not traders. And that's the legacy. I fully support everybody who buys a stock, makes a little bit of money, and then carries along and moves on to something else. I've got no issue with that. That's what I do. That's what everybody in the market does. Sometimes we pick a bad one, as we all know. But the idea here is that you actually try to nurture those relationships for a longer period of time and keep that engagement. It's really important.
You're in the CBD. You've got Love Hemp there, which is a burgeoning company. You're there from, there at Aquis, which has been a bit of a bane for some of us. How are you getting the message across, and how keen are you to sort of show people that CBD is cool, Aquis is cool, you're a company going places?
When we originally incorporated the company back in early 2019, it was originally set up as effectively an investment issuer, and it was supported by a set of Canadian investors that had made quite a success of participating in the early companies that were in the cannabis space back in Canada. And they had the vision to come to the UK and try to establish, as I say, an investment issuer in the CBD and medicinal space. At the time, early 2019, we didn't have the opportunity for a standard list because the FCA had not gotten there yet with their regulatory changes. So given the fact that the majority of the capital came from Canada, and it was long-term capital, it was mature capital, it was not looking to trade, we listed on Aquis effectively as a mark-to-market and giving ourselves some governance to work from while we went out and looked at those investments. As I'm sure that some of you have heard, we found Love Hemp as a company fairly early on in that process after looking at 75 other companies that were almost posing in the space. Love Hemp was a proper company, had proper revenues, had proper visibility on the high street. It was proper e-commerce and proper manufacturing. So it was a really good fit very early on. So when we acquired Love Hemp in late 2019, being on Aquis, that was not the end of the world for us, because it was a company that we were going to nurture and we were going to support financially, and we did through providing them with capital. As we've gone through 2020 and the pandemic and everything else, the operational business of Love Hemp has thrived, to be honest, and it's been really, really good. We just announced some results yesterday, and our top line revenue had grown by 557% over a 6-month period. So it was a really good, punchy revenue growth. The next steps for the company are yet to be told, but it's one of those things where we're hopeful that Aquis manages to get through the next stages that it's announced by getting itself working with some of the smaller brokers, or not smaller brokers, but some of the online brokers like Hargreaves and AJ and the like, and that'll give more visibility and a cleaner path to trading on Aquis for companies like ourselves. So it's a process. There's no two ways about it, and we're working through that. But we're also just digesting a lot because the company is moving at pretty fast pace.
Right, you forgot the juicy bit with Elon Musk investing in a company that you're partnered with.
Yeah, that was interesting news. I opened up the FT this morning and saw that. So yeah, William Morris Endeavor, the parent company of the UFC, they purchased the UFC a few years back, and Endeavor attempted a listing of themselves back in 2019. They abandoned it. I'm not quite sure what the reasons were, but they've just announced that they're going to do a float, and Elon Musk is going to join the board of directors. All of that is credit to the FT, because I didn't have any inside knowledge on that, so I read it just like everybody else. But it's exciting. You know, the UFC as a sports brand, a sports portal, has got just incredible reach from a media perspective. John, you're going to know some of these numbers. I mean, the social media influence, the impact that they've got across the number of countries that they reach from a television and a viewership perspective are absolutely staggering. Their social media is growing at something like 30% over, annually, over and over. And so for us to be part of that process is really exciting. And it's really our true engagement. All the agreements are signed, but the engagement and the actual start date is June 1st this year. And that's going to tie in with our global launch, which is really initially focused on the US with the product line through, both a retail process and a retail prospect, as well as an online prospect. And so we're really looking to utilize that UFC endorsement, I guess, or the UFC ability to access that media and access their client base or their viewership base to really propel the brand forward in a very fast way.
So the Elon Musk angle could actually really power that deal that you've already signed.
I think we're a little bit closer to the sun today, is really the comment, because with us being partnered with the UFC and Elon sitting on the board there, I mean, it's going to be interesting to see what he does and how he shapes that board, because it kind of goes back to the beginning of this conversation with regards to the boards and management. But he's an interesting character insofar as how he has treated the market and used the market and been perceived by the market in many ways. And
he's a fan of cannabis too. So what's not to like?
Exactly. Yeah.
Before I go on to the lads, John, do you want to finish off with it? Shall I just ask you, what were the timelines on MediaTek SPAC, just to wrap it up?
Yeah, sure. We're looking to list by the end of May on LSE, and then the plan is to potentially, we're looking to raise 10 million on admission. I was having a conversation with a particular broker yesterday who was quite concerned about, they'd been involved in a couple of raises, and when they came to close the raise, they were scaled back. So I said, look, I'm not going to have an issue on that perspective, because if I've got more money in my war chest, it puts me in a stronger position to be open up to a bigger net in terms of the acquisition targets that we have. So we're going to look to hit a threshold of 10 million, but effectively, if there's more on the table, we're happy to take it.
Okay. So, Kevin, what are you looking at for the shortened week next week? Anything in focus?
First of all, I'd just like to say that helium is very good for a squeaky voice, so it's always good to take it. Okay. Secondly, yes, maybe nitrogen is better to grow plants with, and I'd just like to point that out to anybody who's listening today.
Yeah.
What am I looking forward to?
Sorry, Kev. Sorry, Kev. Let me just stop you there.
Go.
And what I will say is, week on week, we get comments on Telegram groups from people, right, saying things like, you got it wrong, or you got that fact wrong. Yeah. And all these sort of there's always somebody who's willing to knock you or do whatever they need to do. But the reality is that all of these calls we do are ad lib, off the cuff, literally just, there's no planning really involved in terms of a crib sheet or anything like that. It's literally just, we talk as if we're in a pub, mates. And some of these guys just need to relax a little bit. We all make mistakes. At the end of the day, we're talking about so many companies really that, so many facts out there that we're bound to get one or two things wrong. So, the way I look at it is, if someone says to me is, you got it wrong. So I invite them on. I say, well, come on the Sunday roast next week, have a chat with us. And the first thing they do is they just clam up and
get it wrong.
And that's it. Yeah. No, they don't get it wrong. They're just not happy to talk like we're willing to talk, because they don't have the ability to talk ad lib for an hour and 20 minutes. And that's the fact, Zach, is that, and I welcome people on. If you think, you know more about these companies and more about the market, then please join us and share the wealth of your knowledge, because a lot of them, as soon as they're put under the spotlight, they won't do it. That's a fact.
Last week when we were on the roast, we spoke about quite a couple of stocks. There was MHC, Deep Verge, Tills, and this week I know it's been a terrible week on the markets. I've had a really good week, actually. I don't want to rub that in, Kev, Sorry.
Mate, there's only one person. There's only one person who would come out of a shit week like this going, "I've had a really good week," and that's you, mate.
He'll know what it is. This is go long and hold the idea, and when the market goes a bit bare or people are trading out, if the fundamental idea is there. I was just fortunate this week. I mean, so lots of RNS. Something else that I was in was Drum, which is Angus Forest one. I'll elaborate on that one a bit later down the line, but they've got some NHS government contracts, and I've been holding long in it for a while. And it's interesting because I think it's Billamy's first company when it was listed. He's actually gone back there. So it looks like he's gone back to maybe it's his finale. It could be his finale, but it's really interesting. They've taken a position in Equality, which is it's the cybersecurity arena, and they've started getting contracts with the NHS, which is absolutely brilliant. It's just starting to trickle in now. I think the cap is like under 2 million at the minute. I think it's going to be a good success story there.
Kevin?
Right. I'm hoping that my stocks go up next week.
Right.
That's what I'm hoping for. The main thing, because I've had 3 or 4 weeks now, not good at all. It was actually good until today, and then SYME smacked me in the mouth, and the rest is history. But what I would say to you that we didn't say about SYME today was that 8% of the company was traded today. 8%. That probably equates to 30 to 35% of the float, the free float, today, only today. It's crazy. It went mental. The volume was unbelievable. So anyway, that's the last thing I'll say on this. So what I decided to talk about today was something that we've already mentioned, which was to do with the Love Hemp thing as well, was an endeavor, was that I decided I would talk about an investment which I feel is the least riskiest investment I have. Okay, in other words, the capital, in my view, is pretty much protected and it has upside. So that is Fast Forward. Okay, Fast Forward Innovations, which effectively is trying to turn itself into a CBD investment vehicle. But at this moment in time, it's not really there completely. The main reason why it's not there is because of its main investment, which is called Leap Gaming. Now, Leap Gaming is owned partly by Endeavor, which Elon Musk has just been appointed to the board. But the main shareholder of Leap Gaming, 43.4%, is Fast Forward Innovations. So part of this whole big IPO thing is also going to involve Fast Forward. So basically, even though Endeavor are trying to buy the 49% of UFC, they will also have to buy the 43.4% of Leap Gaming from Fast Forward. So this is going to be a financial event that will happen in the next, what are we talking about, 3 months? Now, currently, the market values Leap at about £2 million because of the way that the thing has been knocked down so much now. It's around 8.5p, with a total value of 20 million or so. Leap conservatively should be worth 25 to 50 million pounds, at least, maybe more. I don't want to egg it too much, but at least. This should double the NAV of Fast Forward when this event occurs. So I'm saying this share should be worth, when Leap happens, maybe 15, 16, 17, 18, 19, 20 pence, at least. And this is already done. Like, Leap is there. It's going to happen as an event. On top of that, they bought 5% of Northern Leaf today, which is the Jersey-based CBD grower or grower on Jersey that raised 14 million today. So again, they were looking for 10 million and got 14 million, just like John was talking about. If they want to give us more money, we'll take it. Thank you. So this is my safe investment. I really do believe the share price now is less than the NAV, significantly less. We think it's about 15% less than the NAV, but there is potential upside, I think, to at least double the share price. So the reason why I covered this one was simply, I feel that this is the least risky of my investments. So yeah, let's just pray that the investments go up next week.
Okay, on to Phil.
Yeah, I think I concur with Kevin on that. I've been watching FFWD for the last sort of couple of weeks. It's hemorrhaged a lot of its value, and at 8.5, sort of 9 pence, it seems a very good value. Now, I think that the sale of EMAC was far too soon, and I think that's what put a lot of people off. They thought that the sale of EMAC was done way too soon before it had any real value. And actually, I think it went up a significant amount after they'd obviously done that, sold off their initial investment, or the whole of the investment. So I think it kind of put a lot of people off. But I agree. I think Leap and all the other significant investments that they've got, especially with the new investment in Northern Leaf, is actually, it's massively undervalued. So yeah, definitely one to watch next week. Forbes is another one. I've mentioned it before. It's one that I'm into, and they released an RNS middle of this week, or yesterday it would have been, yeah, and it's been delayed again. It's the Maltese connection. I believe, talking to people, that Malta is an extremely difficult country to do business in, that there's a lot of bureaucracy involved. So I'm not surprised it's been delayed a bit, but it seems that the second, not raise, but litigation funding there, the monetization, second round, is also been promised by the end of June. So that's one that I'm watching. There's been a few trades in it today, later on this afternoon. It's another Aquis stock. So that's the one I'm going to be watching next week.
The one that I like for next week, but I think there might be a bit of a pullback initially, is Quetzal, which I've also taken a position in. And also Chris Akers has got quite a healthy position in. But I think once the placing stock comes to the market on Wednesday, I believe, I think it's Wednesday the 7th, it settles, we might see a little bit of some traders coming out because they picked up stock at 4p. But I think once that stock is cleared, Chris has been buying quite regularly. Ashok Patel picked up another 1.5 million today. And I think we'll see some interesting developments there, because I think that's another show. Again, early doors, key is to get in, build up a nice position. And just like a few of us have done in AAA and a few of other Chris's stocks, we take a reasonably strong position, just let the story ride out. You can either make pennies with trading stuff, or you can make big money by holding and enjoying the ride. Yeah, and don't forget, John Taylor's on the board now, and John and Chris do lots of stuff together, so that's quite reassuring that John's on the board, and I'm sure he'll be executing on Chris's strategy. But my stop pick for the year, because I don't think I'm going to be back next week, because this is really exclusively for you guys, but look out for Pluto Digital Assets, because I think that's going to be an absolute winner.
Well, I suppose it's already been a winner, though, hasn't it, really? It's been a winner in the sense that, they've raised so much more money than they were looking for.
Yeah, they have. But then, at the end of the day, it's not listing until sort of mid of May. But I think once it hits the market, I don't see any reason why it won't do a KR1 or an Argo blockchain again. Yeah. I mean,
do you think that from your perspective, there are not enough digital economy plays or digital asset plays in the UK? I mean, it's sort of like there's not enough real estate still, so there's plenty of...
I think that's it, but I think also, the guys will look to list in other exchanges, and that's what makes it even more exciting. For me, I think what was interesting for me personally is the first time that I've actually invested in a company at the IPO stage where I know all the 4 directors. That's never ever happened, and that's what gave me ultra confidence that I really wanted to take a nice position in this, because Barry and Brian advised us to MTS, but I know Atif as well, and I also know Andy Frangos. So it makes a difference when you know all of the 4 directors, because it gives you a lot of confidence that these guys know what they're doing. And for me, that's the first thing I look at before I make any investment, is that the people on the board have got to be right.
Can I say one more thing then? That surely Rambler Metals has got to happen sooner rather than later. It's copper, gold, the chain's coming to an end. There must be news coming soon for the 1,350 tons per day at a 2% or higher concentrate for copper, gold and silver thrown in as well. £30 million for a copper producing mine with 20 years life is crazy. It's like so undervalued. It's not funny.
Yeah.
So once it gets up and running again, has to go.
I think this comes back to the whole placing the churn, isn't it? The overhang and the churn. I think there's that many shares. The confetti share statement is there, and once once the churn's done and the overhang's probably done. I think Albert did a calculation, didn't he, the last couple of weeks for you, and he said that the overhang's cleared, but there's still a significant amount of churn, which is generally the placing flippers from the 0.2 pence mark. Once they're cleared, then it will move. Thor did the same this week, didn't it? There's been a few stocks that have suddenly turned, and they always do it, don't they, when you least expect it. We've had Ferro alloy resources that Zach mentioned earlier that have just suddenly gone from. We were in it, Kev, back in the sort of 9, 10, 11 days, and we probably, you always get the one or two, don't you, that you think, I pulled the plug too soon. I sold out at a 20% profit, but actually it's done probably 200%, 300% since we got out, and the success story is there. But these shares definitely do flip when you least expect it. Out of nowhere, there's a re-rate. It's happened this week with ATAE. Yes, they've had a bit of news on their Alaskan well that's being tested this week. But, so many times you close a position down. And it's back to what John said, this isn't for trading. This is for holding and believing in the story of the company there. If you're going to buy a share, hold it for 10 years if you can. I know it's easy to say that, but generally they go when you least expect it. So I do believe that Rambler will have its day.
Oriole is another one this week. It got results. RNS went straight up, straight back down. RNS with gold in the first hole, 4 grams per ton, and shot up 20% and then dropped 20%. So it's like the way the market's working at the minute. It's
sign of the times, and it's sign of the times. You say as soon as there's any good news to market, it spikes maybe 20-30%, and then any rise is just sold heavily into, and it's back. So many times you see it rise and you think, we're on a winner, and then it literally finishes the day either flat or slightly lower than the previous close, and you think, how is this possible that we've had such good news, but it's the market has just, it doesn't compute with people, does it? That there's so much trader mentality out there right now that it's killing sentiment.
Well, gents, I think we've got to kill our own sentiment now. I know our guests have got to hit the road. Thank you to Albert. Thank you to Kevin. Thank you to Phil, and to our special guests, John Mahtani, CEO to Media Tech SPAC, and Andrew Mail, who's chairman at Love Hemp. It's been great to have some proper guests on the show for a change, and it makes it
Happy Easter. Thank you, Zach.
Yes.
Thanks for having us, guys. It was a pleasure.
Thank you. Yeah, appreciate it very much.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.